morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, May 11th. We did get a nice little move up. We anticipated that move. We were looking for a possible right shoulder on the daily chart of the S&P. I'll show that to you in a moment. So we did get a little bit of a push up, follow through from that 60-minute bullish falling wedge that we showed on Friday. Okay, so now we got 3 days up. Where do we go from here? Well, there may be a little more upside, but I am thinking that the markets will probably start to teeter unless there's obviously some sort of news or catalyst to continue to make this move higher. There's absolutely nothing out there, guys, that's anything good. However, with the bad job numbers on Friday, with non-farm payroll numbers, I would suspect that market participants are thinking there's going to be no rate hike, so there's more money coming into the system, and we continue to buy the S&P to the stratosphere. I don't think that's going to happen this time. I think it's going to be much more difficult to just go out and just close your eyes and buy stocks. Not going to happen. Fully valued. We're at major resistance, and we might even push through it a little bit. But I do suspect that in the next couple of weeks, we should be looking for a market top in the markets. Now, again, we're going to need price to tell us that, but I am going to be out looking for it and anticipating some sort of a pause or a pullback and a slight correction. Not a market crash, but some sort of correction, which would be very healthy for stocks. After a 9-week run, stocks are extremely overbought here. And that's not a sell signal, but as you know, we're fully valued, and earnings were horrible. There's no reason to buy stocks here, unless it's just for a big trade. And I mean, like everybody just trading the markets, and that's what it seems to be. Bullish sentiment, one-sided. So you just have to be very, very careful. Risk off can happen at any given moment. But that's what I'm looking for. I'm looking for some sort of a market top in the next couple of weeks when we unwind earnings season. Let's take a look at the dollar real quick, and you're gonna see these charts again. They're repetitive, but you need to know where we are at the moment. And right now we have a beautiful bullish falling wedge pattern. We did break lower, 5 waves down. This pushes up. I would not have a problem with the dollar pulling back a little bit, and I mean by just pausing or pulling even into the bullish falling wedge pattern, creating a higher low from this low, and then excel higher. Maybe that 50 or that 200 would be the next target. I don't know if the dollar is going to scream to the upside, but long as you see, these are the two main targets from here. And if that does happen, gold will go lower, and then that'll give us an opportunity to look to buy gold. Not at these levels. You'd be insane to buy gold up at these levels here from a 9-week run. And gold does not want to go down. It just continues to just move up. 1 day down, 2 days up. It's going to happen, guys. Gold will stop and pause and pull back. When you get to these extreme levels and all of the market participants are buying gold and retail are buying gold and there's commercials on buying gold and the stock boy at the shop right is buying gold, you have to be very, very careful. I would not even touch it up at these areas. Okay, next, spiders. So I showed you this chart about that possible right shoulder, and sure enough, we got it. We actually exceeded that left shoulder and possibly testing that high of the net of the head. Now that does not mean that it's still gonna avoid this possible pattern. Remember, it is a pattern here. It's not validated yet. We need to break this neckline right here. Okay. Once we get down to that neckline and we take out the 202 and then the 200, which would be this area here, then I would look for a real big flush, and we would look for possible targets, okay, to the downside, but not until that happens, okay? 60-minute, I am looking for a pause up at these areas, and I put a Fibonacci retracement, that bullish falling wedge pattern. You can see we got 50, 61.8%, comes in at 208.32, and we're right there now as we speak. So maybe even another little push higher today, but I would suspect that we come back down and fill the gap area here, okay? And then we'll reevaluate it then. But coming into these overbought zones and the momentum oscillators are starting to be overbought, especially in the 60-minute chart, as you can see here. IYT daily looks like to me a nice forming of an M top formation. You can see I would like the right shoulder a little bit lower, but nonetheless, that'll be your neckline, and this is the break. Once we break this area here, I'm going to watch that 136.73. You should keep an eye on that. And if we do break, we get a back test and then fail. That's going to be really the spot right here on that bear flag back test. Okay, but right now, M top formation, which is a bearish pattern. Let's see if it fails in the next coming days. Weekly, we have a big bearish, big head and shoulders on a weekly chart. Most of the indexes have head and shoulders on weekly charts. This one did trigger, came back above the neckline, settled on the neckline, still bearish. The target below goes down to 108.50 on that weekly. Okay, just wanted to give that, show you guys that. Still underneath this downtrend line. Okay, it's going to need to alleviate this swing high right up here, 115.05, for some continued buying to challenge these highs. But remember, guys, like I mentioned, a lot of overhead resistance here. Okay, a lot of supply up above. It's going to need a lot of work for IWMs to even get up to this area, break out, back test, and move higher. A lot of work. Okay, I don't think it has enough momentum to do so. But again, we'll see, and we'll take it one step at a time. It's not what I think, it's what the technical analysis is telling us. Diamonds, right, we mentioned about the back test on this big bearish rising wedge. It did break, and now we're back testing here, okay? And lastly is the Qs. You can see here the Qs recovered nicely after a 6-7 day sell-off, and sitting right underneath the 8, the 20, and the 200, the 50, sitting right underneath this. So let's see if it has enough gusto to push higher, or if it fails here. So that's what I'm looking at for the next coming days. I'm looking for, we had a big move up, so I'm looking for a slight move down, maybe a possible move up in the morning, and then we'll see what happens from there. So I'm going to take this right now kind of neutral. I'm going to just sit on my hands and see where we are now after that run up yesterday, and we did have on Friday and Monday, that reversal on Friday from the job numbers. So a lot of things to digest here, okay? So just take a step back. Let's see where we go from here, and then let's take a big move on where the markets may be headed. But that right shoulder is set now. So we need now, today, tomorrow, we need some sort of a rollover to get that head and shoulders pattern to work, okay? Have a great day, everybody. Take care.